Hello and welcome to another update video about Polkadot. Yeah, the situation on the Polkadot chart is still the same. DOT is still moving in its correction, in its corrective structure. It might be here this kind of sideways correction that's currently playing out as a B wave potentially. We are going to talk about that in a minute, but first of all, for anybody who's new on the channel, we've been highlighting here for the last few weeks, you could say, that we probably have a 5-wave move up complete. It's a bit questionable due to this move down that happened around the 9th of November. They swig to the downside. Not entirely sure if I can really trust it. It was very short, also time-wise in duration for this wave 4. But anyway, it is a decent setback, so we can count that as a wave 4 with the wave 5 that already happened. And it reached basically the previous swing high here, this high that was made in July, ultimately giving us a perspective of a potential inverse head and shoulders that could form here with the left shoulder, the head, and the right shoulder. Yeah. However, it doesn't need the right shoulder to break out. Very important. So for example, if Bitcoin starts another rally, another extension to the upside, yeah, that dot could follow. Very important. I'm not predicting that we will go lower. I'm purely stating here what the relevant parameters are for a scenario in which a third wave rally should happen into the area around $8 to $9, maybe even more in a third wave. And the key parameter that definitely needs to be respected and basically the support level that the price needs to hold is the $3.96 level. It's the 78.6 Fibonacci retracement. Ideally, we don't even go down that far, however, if I gave you my preference, it would be a move into the area around $4.31 and $4.58. The 458 level is the 50% retracement, and it's the previous fourth wave low that was formed on the 9th of November. So there's some confluence there of support. Also, if we then even look further, the $4.31 level is not only key, yeah, as a fib level, it's the golden ratio, the 61.8 retracement, one of the most relevant Fibonacci supports. No, it's also here, previous swing high, previous swing high, previous swing low here in June. So yeah, there is quite a lot of support there. This is also here the potential left shoulder that was formed around that price level. The move down also looks very corrective. So what does that mean? That means we have a lot of overlapping price action, and we can really only count 3 waves down. So it counts best as a 3-wave move to the downside, which is good, which is promising, because it indicates that the move down is not impulsive, and we have a good chance that this support level here is actually holding around $3.96. But as I said, ideally we don't even go down that much. The correction is likely still playing out. We haven't got any impulse to the upside at this stage. That can happen very quickly, though. We already reached the support area once here around the 21st of November. And yes, it was very shallow. It was only the 38.2 retracement level that was reached. But remember also here earlier in, or no, it was actually in October, the price also only touched the support area. So sometimes when the market is very bullish or there's a lot of upside pressure, sometimes only the upper boundary line of such a support area is touched before the reaction to the upside unfolds, yeah, or occurs. So looking then at the structure that could be unfolding here, my view is that we might be dealing here with an A, B, C structure, and the B wave could take all sorts of shapes. For example, what I'm watching at the moment for is potentially a triangle pattern. So B waves, for example, can form triangles. There are also different ways how this can take place. It is entirely possible that the A wave actually was here, and then A overshooting B wave to the downside, basically a running triangle, and we're now forming this triangle, which would be the B wave, and then we come down. Or the A wave was here, then it would have been a WXY structure, and the triangle started a little later. So again, you know, it's not so important to know exactly how the correction is unfolding. We can have a few things here that we can identify. First of all, there is no evidence at this stage that the overall correction is over. Okay, so there's no impulse. We haven't even broken above a previous swing high. And actually in this period, the price has made lower lows and lower highs. Also, we have this corrective price channel, which hasn't even broken yet. A break above the corrective price channel would be only the earliest signal that the overall correction in wave 2 is over. So yeah, we need to see more price action to confirm a low is in place. Until then, I would still prefer a little lower. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.